Price breaks a high, traders jump into buys, and suddenly the market reverses. Or price breaks a low, sell orders get triggered, and minutes later, price snaps back up. These fake moves happen because liquidity gets taken. But the real problem is this: most traders don't know when the market has actually changed its intent. That's exactly what the change in state of delivery, or CISD, helps you see. It doesn't predict moves, it shows you when the market stops doing what it was doing. Change in state of delivery simply means failure to continue. Price tries to move up but fails. Price tries to move down but fails. That failure tells us the side that was in control is no longer delivering results. So CISD highlights moments where buyers stop being effective or sellers stop being effective. This is important because markets don't reverse randomly. They reverse when one side fails after liquidity is taken. CISD helps you visually spot that shift directly on the price chart. If you like learning how to read price properly instead of chasing indicators, make sure to like the video and subscribe to the channel. It really helps the channel grow, and you'll get more TradingView tutorials like this. To apply the indicator, open TradingView, go to Indicators, and search for Change in State of Delivery CISD by AlgoAlpha. Click it, and it will appear directly on your candlestick chart. You can use this indicator on crypto, forex, and stocks, and it works on both lower and higher time frames. Now let's understand what you actually see on the chart. When you apply CISD, you'll notice horizontal colored lines printed on price. When a green horizontal line appears, it means price was moving down and sellers tried to continue lower but failed. After liquidity below lows was taken, price could not deliver lower prices. Buyers absorbed the selling pressure and the market shifted upward. The green line marks the exact level where bearish delivery failed and bullish delivery began. As long as price holds above this level, buyers are considered in control. When a red horizontal line appears, price was moving up and buyers tried to continue higher but failed. Liquidity above highs was taken, but price could not hold higher. Sellers stepped in and stopped the move. The red line marks the level where bullish delivery failed and bearish delivery began. As long as price stays below this level, sellers are in control. You'll also see small dots printed at swing highs and swing lows. These dots highlight where liquidity is taken. A dot at a swing low means sell side liquidity was taken. A dot at a swing high means buy side liquidity was taken. Dots do not mean buy or sell. They simply show where the market grabbed orders before making a decision. After that, you may see buy or sell labels printed on the candles. A buy label pointing upward appears when bullish delivery is confirmed after sellers fail. A sell label pointing downward appears when bearish delivery is confirmed after buyers fail. These labels are confirmation cues, not instant entry signals. You'll also notice candles turning green or red. These are not normal candle colors. Green candles mean the indicator is currently in a bullish delivery state. Red candles mean the indicator is in a bearish delivery state. They help you stay aligned with the current market intent. Let's look at a bullish example. Price is moving down with lower lows. Sellers are in control. Price dips below a previous low. A green CISD line appears. This tells us sellers lost control and buyers stepped in. A logical educational trade idea would be entry after price confirms above the green CISD level, stop loss below the recent swing low, and target toward the next resistance or prior high. Notice we are reacting to failure and confirmation, not guessing the bottom. Now a bearish example. Price is trending upward with strong momentum. Price pushes above a previous high, but price cannot continue higher. A red CISD line forms. This tells us buyers failed and sellers are now delivering. A logical structure would be entry after price confirms below the red CISD level and stop loss above the recent high, then target towards support or previous lows. Again, CISD helps identify control shift, not prediction. CISD helps traders understand when market intent changes. It shows liquidity being taken delivery failure and which side is now in control. Practice this indicator on different markets and time frames, and focus on how price behaves after CISD appears. If you want a full CISD trading strategy with clear rules in the next video, comment below and let me know. Thanks for watching. I'll see you in the next one.